Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P500, the Nasdaq100 and the Dow Jones30 futures chart. Just before I start today's video, as always, anyone who would like to join my free trading signal group, then scan this QR code on your screen. It will take you to my website where you can subscribe. It's free of charge and it only takes 10 seconds to sign up. But let's get started with today's video, and we're going to start here as always with the S&P 500. We currently find ourselves trading up at 4,367. Yesterday we had a very strong move higher, up around 1% to close out the trading session, and this is something that I had been forecasting. If you watched yesterday's video that I posted before these rallies actually occurred, I said that I was looking for a move to go and break above the previous swing highs and go and test 4,500. Many analysts out there at this moment in time do not believe that it's possible. I keep continuing to hear many analysts, hedge fund managers, bankers come out and say, the stock market is overvalued and that we're due a pullback, blah, blah, blah. We've heard it all before. But as I said on Monday's video that, you typically do get these type of articles come out in the press, and this is just simply due to the fact, and we know this, guys, right? We know this, that the hedge funds and the banks, they missed this huge run up so far this year, up around 20%. So what are they trying to do? They're trying to create some sort of pullback by, trying to scare retail traders, people like me and you, sat at home, for us to sell our positions in the S&P 500. And although you don't have that much money probably in the markets, accumulative, if we had all of the retail traders out there, there is, it does actually add up to be a very large position. So if, the hedge fund managers, the bankers, etc., can start to scare us, what's that going to do? It's going to cause some panic, some selling, of course, and then that's going to cause some declines in the S&P 500 where they can then come and pick it up, and then they can argue to their clients that, look, we didn't miss this massive rally. So definitely be wary and be careful of these articles. Don't believe everything that you hear. I actually think the structure right here for the S&P 500 is looking quite bullish indeed. If we just quickly take it down to the 2-hour chart and look at the market from a more short-term perspective, it's clear to me that we are currently find ourselves trading within this bull flag pattern. So obviously we're in that downtrend phase right now, but if we can break above current price area, then I think that sends us straight up to the swing highs that we achieved 2 weeks ago, up around 4,440. And if we can break above that, that's when I think we do find ourselves trading up towards 4,500. Then moving over to the Nasdaq100, very similar to the S&P 500. Yesterday we finished the trading session up around 1.5%, which is very bullish indeed. We currently find ourselves trading at 14,875, and very similar to the S&P 500. I do believe that we are currently trading within this bull flag pattern. If we can take out some of the previous swing highs, and that's very bullish, of course, and that will likely send us up towards this 0.786 fib area, which sits at around 15,400. So I like technology here. I think every dip that does occur, we continue to see dip buyers step back into the market and pick up technology on the cheap. Also, if we just quickly look at the RSI, we are finding some key area of support here. So I do believe that we are going to continue to bounce here, and this recent downwards movement that we've seen here in Nasdaq 100 has just allowed the RSI to correct itself. For now, with a reading of 58, you're going to see investors, come to the conclusion that it's now appropriate to start dabbling their fingers back into the tech stocks. And then just quickly going over to the Dow Jones30, one of my favorite charts at this moment in time. We bounced perfectly yesterday off the 50-day EMA. Again, yesterday morning, this was a move that I had forecasted. I said that we're likely to bounce here and go and test the swing highs up around 34,500. And that's exactly what's happened. We currently find ourselves trading just shy of 34,000. But, again, I'm confident that we're going to continue to see moves where we, break back above this neckline on this inverted head and shoulders pattern. And then that's when we go and target the previous swing highs that we achieved a few weeks ago. And then if we can break above that, then we go to the year-to-date swing high, which is the 34,800 area. So very bullish in the broader indices, despite a lot of the negative articles that you continue to read and hear and see on, the likes of CNBC and Bloomberg, etc. I would just, block all that out and ignore it and just do some pure technical analysis on these indices. And it's actually very encouraging. What I see, especially for the medium to longer term. But that's it for today's video, guys. I hope you've enjoyed the video. If you have, please give it a thumbs up. Don't forget to subscribe to our YouTube channel. And most important of all, if you'd like to join our free trading signal group, don't forget, just scan that QR code on your screen. Just get your phones out, give it a scan. It will take you to our website, and it takes literally 10 seconds to sign up, and it's completely free of charge, so it's a no-brainer. But thank you very much for watching today's video.